All right, what's going on, guys? Welcome back to the YouTube channel. In this video here, I'm going to do a Carvana update, talk about the stock. It's now at $14, basically down 90% in the year. And back in February, I put out a research report to members that subscribe to a report I put out every week. And then in May, I put out a public video saying, hey, look, stay away from this company. It's probably going bankrupt. We're basically $14 from that point. So I want to give an update on the stock, but what I really want to do as well in this video to give you guys some value, like legitimately, is talk about the lessons in this Carvana situation. There's a lot to take away from this. I think a lot of people can learn a few things. And I want to share some things in this video that I learned from this particular short situation, but things like this that'll help you in your investing and trading to stay away from that are valuable. Because again, even in destruction, like something like this, we can take away a lot of positives, which is what I'm going to get into here in this video. All right, so it's been a wild ride. So when I first put this research out, it was in February. So every week I put this report out. I put it to people that subscribe to it. I said it was a short, and I'll get into a few things in a second. If you haven't read the public one, I put it out in May. I made a video and then I actually wrote a long piece called the Masterclass Scheme. I posted it online. It made the rounds on YouTube, social media, LinkedIn. People from Carvana, legitimately C-suite execs, were looking at my LinkedIn account. I got messages from people I haven't talked to in years that I used to trade with. It was a crazy situation, right? So I met a lot of people through this. In fact, last week, a pretty famous VC, he's the founder of StockTwits, seed investor in a lot of things, Howard Linsden. He and I had dinner last week. It was pretty crazy. He and I talked for 3.5 hours. He saw it back in February, I think on StockTwits, I posted something. I've known him for a while, hadn't seen him, but we kind of reconnected on this. So again, it just brought back a lot of crazy things to see this happen. If you haven't read that report and what happened in this company, it's a really big deal, okay? And to let it sweep under the rug and not say it's a big deal, and look, I get it. There's a lot more pressing issues in the world right now. People maybe don't care about this, but it's a really big deal in finance, and the stock's down 90%. So let's kind of go to the recap of what's happened. So I put the report out in February privately. I was like, look, I got to share this to everybody because it's really bad. People are going to lose money. I share it on YouTube. It goes crazy. I met Lucky Lopez. He's founder of Automotive Life on YouTube. Awesome YouTube channel. I learned a lot from him on his side of the story. So when he and I connected off YouTube, he found the video. We were talking about a few things. He was telling me a lot of things on the other side of the business he was seeing. He was talking about missing titles, basically FUD cars. I learned a lot that I couldn't see on the balance sheet of Carvana, which is the industry I came from, Wall Street finance stuff. And I was seeing a lot more shady stuff. When I saw that from him, I ended up increasing my short positions because I was like, look, I know it's bad on my end. And if, again, I don't want to rehash the thesis on this, but he's saying this too. I'm like, this is even more to get short in this. Okay. And this is what I love about YouTube and creating online communities and stuff, because look, had I not met him, I wouldn't have increased my position. I probably owe him drinks or lunch or something. The next thing I'm going to go through is this. I took a lot of heat for this. When I put that report out, there were people on Twitter telling me I was wrong. But I've been here before, right? I've been in this game in 2011 and 13. The desk I was on, we were short for-profit colleges. It took a while for that to pass. I've been in this game before, but it's crazy to see this now. And I'm going to give you guys some lessons to kind of learn from this. Their bonds are toast, okay? I've got a YouTube editor now. Hopefully I'm going to hit it big time here in the YouTube space. We can throw an image up on this. Their bonds are done, okay? Real quick lesson. In the capital structure, if you don't know this, the last people in the capital structure when a company goes bankrupt are the shareholders. Back in April, they did a restructuring, and I wrote about it in the blog post. You should read it, but I'll give you a Cliff Notes version. A firm called Apollo came in and said, look, we're going to throw you a lifeline. You're out of money. We're going to give you, I think, $1 billion or $1.5 billion in bonds. The way they structured this, it was basically a prepackaged bankruptcy in a lot of people's opinions. The bonds now are basically worthless. They're going to have an issue, okay? So the stock is obviously down. It's been getting crushed. Today was pretty bad for it, down to 14 bucks a share. The next thing I want to go through is this, is auto loans, right? There is a post that came out. Automaker gloom deepens after lender Ally reports slowing loans. So Ally a few months ago bought a lot of their loans. Maybe they didn't do their due diligence, right? Maybe they think that even if it goes BK, the commercial paper is going to keep performing and they're going to get money out of this. I don't know, okay? But they even mentioned Carvana. Ally shares nosedives on the results, falling as much as 11% in New York before trimming part of those losses. GM and dealers Carvana, CarMax also fell. Don't let anybody say that Carvana is going to go out of business or is in trouble because the car business is slowing, that used autos are slowing. That's not the reason why. Let's not let history change on this. This company is going bankrupt more than likely. I mean, it should, because of nefarious activities and what this company's done the past 3 years. That's why this company is going bankrupt. It's not because the used auto market popped. There was a big kind of hedge fund hotel on this stock. I've seen it before when I was in the game with this. A lot of these hedge fund guys, they get an idea, they all just piggyback each other, and they get in a circle and nobody checks each other. Nobody says, you're actually wrong on this idea, because everybody's got a massive ego in this game. There was Prem Watson was in this. You had Cliff Sozen was in, Rob Vinal was in this. A lot of smart guys were in this particular name, and their thesis was absolutely terrible. And I don't want to sit there and, kick them while they're down. I've been in situations before. I've lost money. If you have invested, you've been there, right? That feeling you have in your stomach when you lose money isn't fun. So I don't want to sit here and take a victory lap on these guys. But the thing I think we should take away from this is this. This was an era, and I made it in the last video, where everybody got comfortable being passive in the markets. Nobody was doing research. We just invested because we were in a zero interest rate environment, and nobody did due diligence. One of the things Rob Vinal said in his analysis was that Carvana had proprietary camera equipment to take photos of their cars, right? There was a lot of more ridiculous things. That was one of the craziest things I had seen in this, okay? And I don't mean to laugh at it, but it's so ridiculous, I have to. You can go to any auto dealership in the world for the most part, and they have these 360 cameras. There's nothing proprietary about it. If you want to argue the point, by all means, talk to the wall, I guess, but I'm not interested in hearing it, okay? So the next thing I want to go through is this, is obviously auto loans are in trouble. The stock is down. Crazy, right? Okay, so from mentioning this to see it where it's now, again, it's just wild, right? So let's get into the final points in these videos here. I think this is more important. In a negative situation like this, the website's called Longbow. I want to teach you guys, in situations of chaos, there's opportunity. In the case of Carvana, there's chaos, but I promise you, if you're thinking of buying this, there's no opportunity, right? People on the way down were telling me that I was wrong. Where are we at now, right? To do a little victory lap, there's no opportunity in this, okay? So what lessons can you learn? I said in the prior video was this. A lot of companies in a zero interest rate environment could get away with a lot of things, okay? It was easy money. Everybody was buying used cars then, right? A lot of things were happening in that environment. The way they ran their business, again, there's a piece on this, you can read it, was terrible, but everybody could get away with a lot of bad things. We're not in that market environment anymore. The tide's going out. You're going to see you swimming naked, right? It's taking a Warren Buffett quote there, but you're going to see a lot of companies have issues. This company had issues way before this, but it's just coming to fruition now as it gets worse. Number two is this. Look, don't trust Wall Street. I learned this early in my career on the desk I was on. Wall Street always lies, okay? It's time immemorial. There's always a kind of a backdoor kind of thing going on. You got to be very careful with this stuff. Don't trust anything these guys say, whether it's CNBC, research. You've got to do your own work, which is going to get into point 3 on this. Do your own research and be picky. I say this because in my prior career, I ran an education company where we didn't necessarily do day trading, but I worked with a lot of people that were wanting to trade the markets. So one thing that I would always see, this is like a psychological thing in investing and trading, everybody was in a hurry to put money to work every single day. You have to be picky with your capital allocation, right? The markets aren't going to go anywhere. There's a lot of ideas that happen. Take, for example, on this. If you just shorted Carvana and held it for 3 months from 80 to 50 or 50 to 30 or from 20 to 14, and you had one trade that worked for the year, what difference does it make, okay? Now, despite what we see in today's society, the hustle culture, the TikTok investor culture, where for whatever reason, every one of these guys and girls seems to be worth $250 million, this is a marathon. It's not a sprint, okay? So you have to be very, very picky. As we go into 2020, 2023, I promise you, these markets are going to stay volatile. I made a video on it. There's plenty of opportunity to make money. So the takeaway from this is be picky with your investments in the markets. Number 4 is this. Look, timing matters, okay? I learned this early on in my career. This company had problems for a long time. And I learned something back in the day when I was shorting for-profit colleges. You might be right on an investment. And me and Howard were talking about this at dinner last week, and I explained a few things. He asked, he goes, when did you know there was an issue? I knew there was an issue last November because the earnings report, they were only going to have so much money for so long. But even if you're right on an idea, if the rest of the world doesn't agree with you, it doesn't matter if you're right. And if your P&L is red, you can't go to the bank and be like, hey, look, I'm right, they're wrong. Your P&L is red. You're the one who's wrong. You're not right in this. You have to be understanding of that. And again, the best example I can give, and I'm not taking a shot at Michael Burry, I promise. I think the guy's smart. If you watch the movie The Big Short, remember when he shorted housing? He walked into the quote unquote Goldman Sachs and Deutsche Banks, whatever it was. He's like, I want to short housing. They laughed at him. He was 2 years early to the trade, but the rest of the market had to slowly figure it out. And once they realized what was going on, there was a hustle happening, then they realized that he made his money, okay? Same thing with Carvana. So the reason I waited so long was, number 1, I wanted to see more bad data. Number 2, I needed something on the market timing on the price charts to happen. When that happened is when I started my short position, okay? So let's get on to the final point in this video is this, and I want to talk about it here. Look, there are plenty of ways to make money in the markets. Okay. I had a comment in the video before saying, is room a good idea? And on the way down, I saw a lot of stuff like this: $11 million call option past 7 days plus 100% utilization, whatever that means, plus 37% short interest tells me a move to the upside is coming. I placed a bet. I think the bear case is strong, but whatever. Shorts are greedy. Okay. I saw this the entire way down. We'd get to 40, somebody placed $1 million option trade. We got to 30, somebody, unusual options activity on Carvana comes in. It must be good. You're essentially, and again, I don't want to take a shot at this as personal opinion. Stuff like this, you're placing a bet on somebody else's bet. What if the person placing this bet is a complete idiot and you're taking a bet on this? The reason I'm bringing this up is this: is just because a stock is on the lows doesn't mean that there's a value in that company. That's not research, right? As crazy as it sounds to say, and I know some people know they don't do that, but there's a lot of this in the world of investing. That's not research, okay? A lot of people on the way down, I got messages about this company at 30, at 25 saying there's value on this, you're wrong, you're wrong. I don't want to do a victory lap. I don't like seeing people lose money, but don't take this perspective that, again, because it's on the lows, it's worth something. I don't have an opinion from it here. I don't think it's a short from here. I think it's dangerous. I covered my shorts in 30s. The reason I did, to be clear with this, I learned it a long time ago. Same situation with AMC. Those guys got greedy. They were short that stock. They were short until below 5. All they had to do was cover the shorts, make all this money, and they were never in that situation. I didn't get greedy on the short side. I'm out of the position. So that's it for me in this company, but I wanted to do an update on this particular video. Hopefully this helped you guys. Look, I appreciate meeting a lot of you guys from the first video I put out. I met some great people out there, some good kind of engagement, and hopefully you guys started to learn some things, right? This is a good situation. Maybe I'll do a follow-up video or a blog post in the future to kind of make this a case study on investing and trading in markets, because there's a lot of takeaways from this situation this year that I think people could use to build their knowledge base on investing. So that's going to do it for me, guys. Thanks for watching. Please share this video if it helped you to learn. I'm trying to grow this YouTube channel. I appreciate it. I'll see you guys in the next video.